In terms of Section 71A of the VAT Act, we need, in order for output VAT to be levied, we need a supply by a vendor of goods or services that is supplied in the course of furtherance of any enterprise. This recording is going to take a look at what is meant with vendor, including the definition of person for VAT purposes. The definition of vendor is very, very important for VAT purposes, because if a person is a vendor, that means that that person has to levy VAT on their taxable supplies, and they can claim input VAT on certain purchases and expenses. The implication of this, of course, is that a non-vendor, somebody that is not registered for VAT, will never levy output VAT on the selling of his goods or the rendering of services, and will never be allowed to claim input VAT. Now, what is a vendor according to the definition in the VAT Act? A vendor is any person, so we need to think about what a person is for VAT purposes, who is already registered for VAT or who is required to be registered for VAT. Now, this one is very interesting, because what it means is that even if a person is not yet registered for VAT, but they meet the compulsory registration requirements, which we'll take a look at in another recording, then they will be regarded as a vendor because they are required to be registered, even though they haven't registered yet, and they will have to pay output VAT to SARS, even if they did not actually levy output VAT as part of their supplies. So this is very important. A vendor is not just a person that is registered for VAT, but it is also a person that is required to be registered for VAT, somebody that meets the compulsory registration requirements. Now, a vendor is any person. So if we look at the definition of person for VAT purposes, the person definition we also find in the VAT Act, it's a natural person, company or a CC, a partnership, a public authority and municipality, a trust, and a deceased and insolvent estate. Now, these two should be quite familiar to you because they are also persons for income tax purposes. But something very interesting in terms of the VAT definition of person is that it also includes a partnership. We'll look at partnerships in a few minutes, but once we know who a vendor is or who a vendor is supposed to be, we're also going to think about the registration requirements. But before we look at the registration requirements, let's just take a look at partnerships. So a partnership is a formal agreement where two or more persons formally agree to pool resources and to operate a business together and to share any profits and losses. So the issue with partnerships is that it's not a separate legal entity, but for VAT purposes, it is specifically included as a person. And this means that it is the partnership that will register as a VAT vendor and not the individual partners. Important, spouses that are married in community of property are regarded as a partnership for VAT purposes. And what this means is if you've got spouses, a husband and a wife, who are married in community of property, and then the husband, for example, trades, he's got a business, from a VAT perspective, that marriage essentially is seen as the partnership and will be the registered VAT vendor, which means that if the husband, for example, dies, the partnership continues because the wife is still living and will still have to account for VAT. Now, because the VAT definition of person includes partnership, it's important to understand that the income tax definition for person does not include a partnership. For normal tax purposes, a partnership is not a person, and we have to calculate the taxable income for each individual partner and not the partnership. From a VAT perspective, it's not the individual partner that's the vendor, it's the actual partnership.